Well, good morning, Jaginder Rana here. The topic of the day is Lapsation and revival of a life insurance policy. Lapsation and revival of a life insurance policy. The insurance policies are active for as long as the insured continues to pay the agreed premium. Now, what happens in case the insured misses a payment due to any reason? What can be done to recover the situation? So, insurance companies understand that the insured might not always be able to pay the premium every time before the due date. Now, almost every insurance policy offers a grace period. It is important to note that the policy is still enforced during the grace period. It is important to note. And if anything happens to the insured, the nominee would still be eligible for the benefits. So, grace comes before lapse. Now, the life insurance industry has undergone several changes, which include the introduction of new regulations like protection of policyholders' interest, licensing of corporate agents, linked product circular, linked and non-linked products, registration of corporate agents, management of expenses, and like that. So this has led to a recalibration of the distribution models along with the rebalancing of the product mix. Technology has been a key enabler and has played a key role in improving customers' experience in onboarding and service. Now, what is a lapsed policy? Lapsed policy means if the insured does not pay the premium amount, even during the grace period, the life insurance policy gets lapsed. In this state, the insured will no longer enjoy coverage from the policy and will also not be eligible for any death benefit. But there is a way out. A policy lapse occurs only after the grace period. If you have missed paying your insurance premium on the due date for any reason, your policy will not automatically lapse. In case of life insurance policies, you get a grace period of up to 30 days after the due date, during which you and your insured family members will continue to be covered as per the insurance contract. So once this grace period expires and you fail to pay the premium, then the policy lapses. After this, your insurance provider is no longer under legal obligation to make a death benefit payout. Now, if your policy lapses, all is not lost. Reinstating a lapsed policy is actively encouraged, and your insurance provider will facilitate this process if you approach them. So, depending on your type of policy, provider, and contract terms and conditions, you will have a window, usually 2 years, within which you can revive a lapsed policy by paying all the missed premiums and accumulated interest on them. So even though you are granted a 2-year window to revive a lapsed policy, it will be a lot easier and cheaper the sooner you do it from the date of lapse. So within 30 days to 6 months since the lapse of your policy, you will require little to no underwriting if it is less than 30 days for reinstatement. So you will only need to submit a declaration of good health along with the unpaid premiums, penalty interest, and the revival fee, if any. So after 6 months, you will most likely be asked to undergo fresh medical checks or checkups, and your insurance provider has the right to change the terms of the contract or increase your premium. Now, reviewing a left policy will likely cost you less than new. Even though reviving a left policy may seem like quite an expense, but taking out a new one will, in most circumstances, be even more expensive. You will have to forfeit the premium you have already paid on a left policy, which is money down the drain. There is a possibility that your premium will remain the same when you reinstate a left policy. But if you take out a new one, the premium will definitely be higher than your left policy, because premiums increase as you get older. Premium increases. It is therefore best to reinstate your policy at the earliest. So ensure timely premiums payment can help avoid a lapse. Keeping track of all your investments and payments can be difficult, and you may miss a premium payment due to oversight or extenuating circumstances. So these extenuating circumstances may compel you to timely pay the premium. A highly recommended way to ensure that all your insurance payments are made on time is to set up electronic clearing exchange with your bank. So with ECS, your premium payments will automatically be transferred from your bank account directly to your insurance provider at pre-decided dates. It is secure and tightly regulated and carries no additional charges. So by setting up ECS, you no longer have to worry about juggling multiple due dates and paying your insurance premium on time. Now finally, even though there are steps you can take a revival of a left policy, the best course of action is to never let it reach that stage. Once a policy lapses, your family members and you are no longer covered till you reinstate the policy, and may have to bear extremely high medical cost in that period or forgo a death benefit in case of a term plan. So reviving a policy comes with its own attached costs, such as penalty fees and higher premiums. If you don't revive your policy, you have to forfeit all the premiums you have paid so far. Therefore, you should take every measure to avoid a policy lapse. Most insurance policies offer a revival feature. With this, the insured can revive his or her left policy if he or she comes to the decision of renewing it. So there is a process that needs to be followed for reinstatement of the life insurance plan. So firstly, the insured will have to submit proof of continuity or continued insurability. These documents vary from insurer to insurer and also depend on the time lapsed. Secondly, the insured will have to pay all the due premiums along with the revival charges prescribed at the time of payment. And lastly, if the insurance company sees fit, the insured might have to undergo a medical examination. So post the successful accomplishment of these conditions, the insurance policy will come into force with all its original benefits. So, what you should do? Who benefits by revival? Just do not believe any sales pitch to do with traditional insurance plans. The only product you need is a term plan. And those over 60 do not need any insurance policy at all. But it depends upon the choice. Because product can be taken by the person as per his choice. So the premiums for term plans increase with age. For example, If Sumit 25 buys a term insurance plan, pays an annual premium of rupees 6,000 for 2 years, and lets the policy lapse, he would have paid rupees 12,000 per annum. Now assume that he wants to renew his policy after 2 years of the last premium paid. So the insurer will charge him a renewal fee, late fee plus interest charges for the premiums due for the last 2 years. So let us assume all these adds up to a total of 18,000. Alternatively, if Smith, now 29 years old, looks for a new insurance policy from another insurer, it might cost rupees 8,000 annually. In this case, he would be facing a loss of the premiums he has already paid for the old policy. Moreover, he will have to pay rupees 2,000 more every year than what he would otherwise pay in the old policy. So remember, if the old policy is reinstated, the premium usually remains unchanged, and that can make a difference in the long term. So in the end, the decision to revive or buy a new policy varies on a case-to-case basis. Because policies of eligible products can be revived within 5 years from the date of the first unpaid premium. The insurer is also offering a concession in the late fees for a new policies, except term insurance, health insurance, multiple risk policies, and those that are high risk in nature. So this, however, is not the first time an insurance company is provisioning for the revival of lapsed policies. In the past, private insurers such as Tata a life insurance company, and Bajaj, Allianz, and almost all the companies are running revival drive, and they are taking similar initiatives. So an insurance policy lapses when you stop paying the premium on the due date and during the 30 days of grace period. Now, depending on the nature of the policy, it could either lapse automatically or allow a window for revival. But typically, insurers are required to offer a revival period of 2 years for policyholders to reinstate their policies. Almost all life insurance companies allow the revival of lapsed policies within 2 years from the date of the lapse. For the same, policyholders have to pay the due amount with interest or penalty. Pure risk covers. In case of pure risk covers like term plans, the policy lapses if you don't pay the premium even during the grace period. So you may have to let go of the premiums as well as assured benefit. So for term plans, revival means that when within 3 months the policy is reinstated with a health declaration but beyond 6 months the proposer will be asked to take the medical tests all over again. So the need for medical test may also change based on underwriting rules for specific products. Say for example, unit linked insurance plan. So in the case of ULIPs, you can revive the policy up to 2 years from the date you first missed paying the premium. If you skip paying the premium in the first 5 years or during the lock-in period, the policy is considered lapsed after a 90-day period, and the insurer moves the fund value to the discontinuance fund and levies a discontinuance charge, a maximum of rupees 6,000 if discontinued in the first year. If you skip paying the premiums after the lock-in period, the insurer will give you an option to revive the policy. Similarly, in traditional plans, if you don't pay the premium for traditional plans before they require a surrender value, then you may lose all the premiums paid. But if the policy becomes paid up, it doesn't lapse and continues with a reduced sum assured. So traditional policies require surrender value after 2 to 3 annual premiums and paid if it has been more than 2 to 3 years since your policy lapsed. The only time you can revive it is if your insurance company comes up with a special campaign like the one LIC is launching every year. So insurance companies do launch a revival campaign, and that allows our customers to revive their policies even after 2 years, with some conditions that vary from insurer to insurer. and plan to plan, but the smart thing to do is to pay the premium regularly. It is easy because there are several modes, online and offline, of premium payments. Setting up standard instructions with ECS with your bank is the most convenient method to ensure that your premiums are paid on time. Opting for an annual payment mode and helps reduce the hassle of remembering the due dates. Thank you very much.